Welcome back. We are at episode 9 of the 24 hours special for Refinitiv Perspectives Live, and I welcome you to join us for the subject of electronification of the financial markets in 2021. I welcome my first guest, Trinh Nguyen, Senior Economist for Emerging Asia at Natixis, and then we're going to follow up with Antonio Grasso, founder and CEO of Digital Business Innovation SRL. Welcome, Trinh.
Hello.
Hello, and thank you for joining us and taking the time to discuss a couple of things. It's an exciting 24 hours, and then of course each episode brings in something different. So I want to directly dive into your work in terms of electronification in the financial markets. And when you do your analysis in thinking about Asia economics outlook and the financial markets outlook, how has the electronification of finance and the markets changed the way you operationalize your day-to-day work, and from analysis to dissemination or communication of research to your key stakeholders?
Well, thanks so much for having me. So first, let's just talk about this is a very broad topic, but electronification of financial markets or digitalization. It's already happened before COVID 2020. And that because people increasingly, the way they consume information, the way they disseminate information, the way they spend their lives have changed. And so as a result, it has changed also the industry in which we try to scale up and through the operational process, to the data analysis, to the dissemination. Now, what has happened into 2020 was that the trends in which people thought they would do were absolutely accelerated by pure necessity, the necessity of the fact that we humans are vectors of the virus. So in which, instead of having person-to-person communication, we then become reduced to digitalizing our communication and substituting that human element with more distance, right? So basically, we're shortening the distance in terms of the way we communicate. So you and I can have a conversation very quickly over Zoom when you live very far away, but we're also more distance in a personal basis. So that impacts the way that individuals, sectors, economies behave and benefit on an aggregate level. So that creates losers and winners. So that influences the way in which we analyze economic analysis, in which we look at not just the data, but also the trends in different ways. So a good example is that when we think about Asian economic outlook in 2021, we have to look back at what happened to 2020 because of the trends I explained to you, that we need to be much faster in looking at, for example, how does human mobility, using the way that people communicate, the way they change, and that impacts the collection of the data we have. So we no longer just wait for the National Statistics Bureau to create a lag data that's a month earlier, but looking at people's looking at their mobile, their restaurants booking, electricity generation, etc. And also in looking at that, so that's an operational aspect of my work. But on the analysis side, it creates winners and losers, right? It creates winners in that winners are those sectors that are ready, industries that are ready, even within industries, companies that are ready for this very accelerated trend that we had that will force upon us, but it's already happening before. And you can see that even in retail, which is a sector that doesn't really do that well. If you have internet and you're able to sell online, then you can actually move goods without when people are stuck at home. If you're a restaurant, if you're able to use a delivery service, you're able to offset the fact that people are no longer hanging around, right? It influences the real estate sector. It creates winners in that the homes are rising. So you see sectors are rising. So and within that, you have economies that are winning too. So economies that, of course, are ready for digitalization are doing much better. Economies that have sectors that directly are impacted by people spending more time doing what we're doing right now, such as chips, electronics, homeware are doing much better, such as South Korea, Taiwan, even Vietnam that assemble this stuff, and of course China. But to a lesser extent, economies like Thailand that depends on people really just moving from one country to the other, going to Thailand to consume physical goods at these wonderful Thai restaurants and massages, right? So that impacts asset classes across Asia, economic performance, and also the way we analyze. So when we look into 2021, which is where we are today, which is the very beginning of, and how that would change, and our analysis then would have to say, well, how much of these trends that we see will remain and how much of that will change. So of course, there's a human element of it that we cannot erase. So that requires to normalize. And so the way I do research, for example, we have to track the vaccination. We have to track different things on how these different economies and the research that we produce. So even in that, the way I produce and looking at my projection of 21 and the normalization of some of the losers and whether or not they will do well, which is our call, it is also a little bit different than before, because instead of looking at PMIs and waiting for that to happen, we're looking at something that's even more forward-looking at the distribution, the acquisition of vaccines. So I think that that's what has changed, is that you have to think of trends that would change and that will remain. The second aspect is that human behaviors, although fundamentally don't change, right? We are becoming more digital. We are becoming more distant. We're also close. But that creates the democratization of ideas, of information. That also creates a democratization of how we disseminate information. And for example, what I do after producing research, writing a report such as how is distribution in Asia doing, how does that impact financial markets in 2021, how I communicate that, right? So traditionally, the way I communicate that would be, you have physical press conferences, you have physical meetings with clients, you have physical road shows going to different countries, which means that that's very personal and catered, but it also has a very high barrier, which is I have to physically fly there. There's a lot of prep time, etc. But now we can just do it over a call. So that has broadened the audience, right? And of course, there's other areas that, as you can say, the digitalization, meaning that there's more access. So you can become, in a way, much more personal even, right? But even if you're at distance, so there is a huge change that's happening. And I think that in itself requires people to cope and adapt much more, much faster because of this COVID-20 that is forces upon us. And I think that will absolutely change the industry. So from all aspects, not just the operational aspect, but the analysis and the dissemination of ideas and the ways we live our lives.
Yeah, you've been talking about the input that you're getting. That is definitely that's definitely a difference nowadays. So there's much more sources, probably much more information load that you can get for your things, and you have to be faster. And then of course the output changes. Then you mentioned the physical aspects of not having to be there, saving time with that, probably also being able to do maybe more meetings or any kind of conferences is also having a great impact on the adaptation and the type of working for many others, and not just you within the research base. But probably this is also one of the bigger changes within your day-to-day, as you mentioned, right?
Absolutely. I think there is a trend of communication, and we have, of course, trends of communications throughout the ages. One of the great forces of globalization and the reshuffling of supply chain was a reduction of cost of communication, right? We started with the phone, the internet, and the reduction of cost of transportation. Now we're taking that to a next level after the email. So now we're reducing the cost of us communicating to people to basically very little, very resistant cost. Now that cost allows us to basically reach out much more, to scale up, to have much broader reach, but also in a way even more personal, because you can now have your own personal take on many things, and people can reach you much more personal level. So that is what has completely changed, and that's also changed the way people do business, not just people such as myself who are spokespersons of banks whose job it is to communicate and keep up to date with the ways in which we communicate, but also on an operational basis, right, of other aspects of banks are not related to just research dissemination of information, that also change the interaction between clients. It changes the way professional people create visibility, right? The visibility before was very, 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 very niche, very, very, I would say very, very, you know, and who you know, gatekeepers, that sort of thing. But now it's about creating this persona on LinkedIn, persona on Twitter, on all these social media network, because the way we communicate has become more broad, right? But also targeted. So that creates a much greater need to become more nimble, and there's a greater need for people to be more acutely aware of how to navigate this very, in a way, efficient but can be difficult environment for some people if you don't differentiate between different sorts of information and how we project it, right? So in our information, where information doesn't cost a lot and there's a lot of information, it's a question of how you use that information, how you analyze that information, what information to take, and then what kind of information you want to project for yourself, right? So all of that is very important in this new age of digitalization of financial markets, because you will be bombarded with information, right?
And you're already mentioning the benefits and the pitfalls of such trend on both sides. So for someone who produces content in regards of the 2021 outlook also, and a consumer of research, where do you see the biggest like pitfalls or trends, both for yourself, of course, and for the consumer of those researches that you produce?
I think of course, I think in financial markets and as an analyst, I think information is readily available everywhere. The question is how you being able to discriminate this data to be able to know, and so therefore, like, you know, in economic research, it's about database you use, where you use, what you use, and it'd be getting information. So if you get data that's not so much quantitative or qualitative, how do you use that to interpret it? So the ability to discriminate information is very important, right? So more than ever, the more overload information you get, you actually need more editing. You know, so actually it takes two to tango, basically. So the more you have, the more you have to discriminate, because otherwise you're going to be overwhelmed of what are we going to do with this, you know, a million of research that we're getting, or a million news articles from all sorts of random places, which is the information you need to actually make the accurate analysis of what are the trends, existing trends, future trends, and how are you going to better allocate your capital, for example. I think that the second one that I think on top of just that's a consumption of data. And so myself, I do consume data to then create data and an analysis. And I think that the second part is also on the way that now that everyone is on the internet trying to create this persona, there's a clear learning curve that many people have made, and you know, obviously you can see that with the president of the US, that there's a learning curve as well. Is that there's a tendency to think that just because communication itself is frictionless doesn't mean it's not costly, right? So it costs in terms of times, it can cost in terms of reputation. So you have to be very discriminating, not just what you consume, what you produce, but also how you communicate that and what you want to communicate in terms of the information you want to communicate to the World Wide Web, or the you know, the broad professional network that you want to broaden, right? And so that could be a great reputational enhancer or business operational enhancer, or it could be a huge reputational risk. And I think that those ideas are all the same, and it all requires a lot of training and learning and discriminating of information, really, and the editing of it is very, very crucial.
Well, thanks a lot for your input and of course, your time and your insights. I will switch to our second guest, which we also have for this conversation, of course. So Antonio Grasso, welcome to conversation.
Hi, Shahad. Good morning to you. Thank you for having me. It's a very good pleasure for me. Thank you.
Thank you for your time. I mean, we just talked about, to Trinh about digitalization and in your area and in your opinion, of course, digitization and digitalization enabled by digital diffusion and are driving this whole digital transformation in our society and economy, of course. So what kind of analogy can we see in the financial markets, in your opinion?
Yeah, Saad, I never stop talking about difference between digitization and digitalization. They seem the same, they look the same, but they're different. And the difference is very teeny. So when we talk about digitization, we talk about a product that becomes digital. For example, the music industry, the vinyl, the CD, there's changes electronically, they become MP3. This is the shift from a physical product to a digital product that has digitized. So we say digitized. And when instead you inject digital technology into the process, you need to talk about digitalization. So digitalization is the process. Both of them are the main actor of this paradigm shift that we are witnessing now, that we call digital transformation, that is enabled by digital diffusion. Digital diffusion is something that we have in biology, our cell, our molecule, they're in diffusion every time, and now we see digital diffusion is impacting. How this is impacting financial market? How we can translate this concept into the financial market? Well, let's say it started some years ago where banks, financial institutions started to have a digital interaction with the customer. Okay, so for example, digital payments, everything that is related to transaction, they're around the process. So we are talking about the process. We cannot say digitization. We need to say digitalization. So we are digitalizing a process that is a payment process, transaction to subjects, transfer of money. But that is not money digitization, because the money is related to an economic value. The value of the currency is related to an economic value. That is the trust that other nations have in that value. For example, the exchange rate between US dollar and euro is driven by trust in European economy or trust in the US economy. That is something really that we have changed from the past, where the value of a currency was related to the gold. Every nation, I have 20 tons of gold, so your value is this. We abandoned that kind of definition while we are relating on trust between nations. So if we want to digitalize the payments and the money exchange, yes, we can do. We are doing from years online banking, electronic transaction, but we have some pillars. We have some pillars that we have not changed. Intermediation, centralization. These pillars are pillars in the financial market. And then we understood that financial market must be regulated. Why? Because money, is feeding criminal activity, can foster criminal activity. We cannot permit this. So in the shift from real physical world to the digital world, we need to make a differentiation between the money that as the process digitalized, let me say this way, and the physical currency that become digital. Currently, we have not yet reached the real digital currency. We have some experiment. I try to better explain. For example, let's talk a cryptocurrency, about cryptocurrency. Yes, we talk about cryptocurrency, but we can talk about generically tokenization. Tokenization is something that is growing this year, and I think will grow also in 2021 and the next years. Tokenization will permit us to digitize. So one physical product, one physical asset become digital. As the vinyl or the CD, or for example, movie with Netflix or with the streaming that become digital. So in reality, the transaction are digitalization, the intervention that we do on transaction. But when we talk about I want to digitize asset, financial asset, currency is one financial asset, we need to talk about tokenization, something that rely on the distributed ledger technology. Blockchain is one of them, and I think is the best represented, but many problems remains. How we can deal with regulation in an open market? Bitcoin has created a new case because Bitcoin is a currency, a cryptocurrency. But which value back Bitcoin? Nothing, no economic value because it's not related to some economy, some country. It is just, I don't know, just the value that each of us give to it. Bitcoin for me can value $50,000, for other can value. So this creates volatility. You know, volatility, the price go up and then go down. People are investing, people are gain money, people are losing money in Bitcoin, but it is trading.
This is exactly what you're mentioning. What are your concerns about all that? I mean, you've talked about tokenization and then of course cryptocurrencies, which is a big subject at the moment, of course, with Bitcoin going up and down and then, you know, reaching heights that have never been reached before. But what are your concerns about exactly that?
About cryptocurrency, my principal concern is that they are they can foster, they can feed criminal activities, money laundering. You know, Bitcoin, many people talk about Bitcoin is related on blockchain. It is transparent because blockchain is transparent. I know blockchain is transparent. If you watch the transaction, you see all the transaction from A to B. The problem is who is A, who is B. If you have a wallet that is named Daffy Duck, for example, I don't know if this can be acceptable because, you know, many black hackers are using Bitcoin cryptocurrency, you know, to hide. We are let the dark web grow. We cannot permit this. So in my mind, let me say, many friends of us that I really trust in them, they don't like cryptocurrency. Many of them, they don't like because they think that, Antonio, we don't need the cryptocurrency. Why? We have a digitalization that can, yes, but this is a different aspect because cryptocurrency is the real digitization of some value, some asset. So cryptocurrency, the big problem is the money laundering because behind that, there's humans. Humans, when you talk about humans, we are good humans, we are bad humans, we are humans that live working every day, and then humans that want to gain money easily, you know, without any effort. So we cannot permit. I think money laundering is something that will kill cryptocurrency if we do not act. But how to act? Create a top regulator, and this is not disintermediation, because the main principle of blockchain is disintermediation, decentralization. If you start acting, regulating the identity of the wallet, for example, one main organization, sovereign national organization that certify digital identity, you are relying on a central authority. So you are no more disintermediation. So I think, in my view, tokenization and stable coin. Let me introduce the stable coin. Stable coin is a kind of cryptocurrency that rely on a physical asset. can rely on gold, can rely on stocks, can rely on currency. Okay, you have the stable coin of the US dollar that is digitization of the bill. You know the bill, the notes. You have the bill is digitized through the stable coin, but we need to work on that. It's too easy to me to. It's too early to try to regulate this kind of stuff.
Yeah, I mean, talking about regulation, as you mentioned it before, how do you think, and that's, to a more or less outlook for 2021, how will regulation impact the disintermediation that you just mentioned, which is one of the pillars of the digitized currency?
Yes, disintermediation is one of the goals of the blockchain distributed ledger technology. I think each country will act separately from other countries. This can be a problem because we can have different regulation. I see I'm collaborating with some organization in Asia. They are moving faster about this tokenization because tokenization is a flexibility added, but the token are regulated by the country. So real disintermediation, real decentralization, when we talk about money, it's not possible. It's not possible to be disintermediated because disintermediation means no regulation, means that you can open a wallet, you can say Goofy as name, surname Daffy Duck. No one is checking if you are a terrorist, if you are a good guy. So I think supranational organization must act to create, I don't know, a sort of agency that can, orchestrate the various regulation that we see in the 2021 started. But okay, just to sum up, tokenization will be disruptive for the financial market, and will be also, we can gain trust on the token because the token is backed by a value. Can be a currency, can be a stocks, can be commodity, can be whatever you want. You can just try to exchange, to trade this kind of a commodity without using the physical commodity. Many people say, I know, Antonio, but now I use electronic. Yes, you are not using electronic commodity, for example, oil. If you buy a future on the oil, you need to sell before, otherwise they want to deliver you barrel of oil. I don't know if you can. But by the way, with the tokenization of a particular asset, we can foster also on social media, because many people around the world have no bank account. They have no bank account, and we cannot permit that they will not be included in this in our process. But we need to watch out. We need to watch out because tokenization, in this case, stablecoin. I'm referring to stablecoin about currency, for example, US dollar or euro that will be tokenized, creating a new stablecoin. It's important because the value is that 1 euro, 1 token, 2 euro, 2 token. So you don't need to fear about volatility because the problem is that we are creating electronic cash. Every country worldwide is pursuing to cut off the cash, do electronic transaction. And then on the other end, we are creating stablecoin that is electronic cash. So we need to regulate also the stablecoin. My view is that every country will adopt different regulation from around the world. And this is not good. We are in the globalization 4.0. We are in the next stage of globalization. And I think global economy need to be more inclusive, more broad, and instead more secure, more trusted. If we don't add trust to this financial digitization, we can have a problem in the future.
Yeah, it all comes back to trust. We have had that in a couple of other episodes as well. Thank you for your insights. You have put it very easy to understand, very beautifully together. So thanks for your time.
Thank you, Shahad. Thank you, Shahad. Thank you.
Perspectives live. If you enjoyed this episode, you can download a report, The Value of Data in the Age of Uncertainty, by scanning the code or going on the link that you see on the screen now. As always, thank you for joining, and be sure to stay tuned. We're going to have our next episode on the hour, ESG and sustainable investing culture. See you in a bit.